You have to ask yourself what not to focus on, because there are so many themes within themes which are evident. I'm just looking at the FNO. I mean, just looking at the cash segment stocks here, Unicommerce, Ola, Zomato, PB Fintech. Devin bhai, what's happening? 75 rupees, nobody wanted to buy Ola. It barely scaled through in terms of getting subscription at the IPO, and it's gone from 70 to 140. What has changed? Why did the issue not see such a resounding response, and then why the investor response after listing has been absolutely grand?
Hi, Nitin. Good morning. Well, I believe that I think it's more to do with the liquidity available with the fund managers and the compulsion to add new ideas into the portfolio. Because in existing ideas, I think the exposure limits have reached. And given the kind of inflow of money that they are getting, they are compulsorily required to look at the fresh ideas to buy into the portfolio. And I guess I think the Ola kind of company has fall into this particular category, wherein probably the stock got listed at the same price at which the IPO price was. And thereafter, I think the buying has happened in the respective counters, respective funds into the portfolios. I think it's more to do with the liquidity at this point of time, less to do with the fundamentals. Underlying fundamental story and the prospects, they remain as it is as they were at the time of IPO. On the contrary, I believe that I think more and more they try and sell the electric vehicles, more they will have to create the visibility as to how to make profits. Because in the current situation, they are losing about 24,000 rupees per vehicle. Now, if they are going to expand the volume base, how much I think they would be in a position to I think save as far as the losses are concerned is something which one will have to ask I think to the company eventually. And that's where I think the real test would be, I think, in subsequent quarter when the results come out. But overall, I think it's largely the push which is coming in for the purpose of including stock into the portfolio. Other fundamental prospects remain same, I must say, but I guess I think the company will have to show the profit picture to the investors eventually.
Devin bhai, what are your thoughts on the entire cable and wire segment now? I mean, it has already done pretty well, not challenging the question as in the investment argument, but valuations more over there. Would you still be comfortable getting in there 45, 50 time, or you would either stay put if you bought earlier or wouldn't touch it right now?
Hi, Ajay. Good morning. Well, I believe that I guess I think the important part is that this year has started with a high base effect. See, last year and previous years, I think the base effect were I think quite low. And today, I think we are now seeing the base effect is catching up, which means that I think on the current base of earnings that the company has produced, unless they show relatively higher amount of growth in the business, I don't think that the premium valuation of yesteryears would probably get justified in the markets. Now, that would hold true for most of the companies because most of the companies have commanded the price earning ratios of 40, 50, 60, even 100 for that matter, based on the assumption that I think the growth rate is 30, 40, 50%. Today, the situation is that I think the growth rate has come down to the normal levels with in parity with the economic growth. If economy nominal rate of growth is around 11, 12%, then these companies have started assuming the growth of around 15 to 20%. And that's where the premium valuation would probably get adjusted. It's my understanding. And there is nothing wrong with the business condition, I must say. In fact, I think companies like Astral, such companies like Polycade, I think all these companies definitely have significantly large amount of business opportunity out here because of the segment in which they are operating. There is a building material segment in which they are operating. They are actually having a phenomenal amount of runway ahead. And that's where probably I think the business condition wise nobody can argue. However, the valuations are likely to get adjusted, and that is going to be true for most of the mid-sized, small-sized companies when the valuation rationalization exercise likely to take place in coming quarters in our markets.
Devin bhai, tell me some stocks where you're telling your clients actually to book profits. I mean, book profits and sell is something which Deven Choksey ever speaks about, but now we can talk about it at these levels, right?
So, yeah, Nikunj, I think of late we have been quite cautious about some of the companies where the valuations have reached at a premium levels. And that's where probably I think we have been offloading part of our holdings even from PMS portfolios, wherein I think some of these companies have actually touched, I think, 60, 70, 80 kind of earning multiples. And on the other side, the earning growth I think, is remaining, I think, somewhere in 20s and 30s. So to a certain extent, I think there is a case for making some profit looking in those companies. Now, whether I think we go into individual companies and make a point out here, answer is no. Because many a times I think you do book profits and thereafter I think you also have to see the market telling. For example, I think we ended up buying companies like Zomato in our portfolio little ahead of time. Probably, I think after that it fell. And again, I think we have to buy in the fall, in the two digits fall below 50. And then when stuck, I think 100 plus, we thought that I think we are on good enough money. I think in today, I think it is 100% over and above that particular price. So yes, you do have that situation wherein you end up buying something at a lower levels, end up booking profit at a slightly higher levels, and then after you see the market giving the different kind of a dimension to the stock price. But that doesn't take away the opportunity from you of I think booking part of your profits in respective companies. And that's what I think we need to do in order to continue showing the better performance in the portfolios.
Okay. I am scanning through a long list. And we have a management of Kaplan Point Laboratories coming today. The stock was up 16%. You need to understand what's happening in that space. Pharma, in a sense, is making a comeback also. The other stock which is worth revisiting, I think, on my screen is IFL Finance. It was up 12.5% yesterday, 450 rupees. It's almost gone back to Ajay, I think, where the entire RBI thing had happened.
Not really. I
Not
mean,
really.
the 500, the price was around 500. Pull up the last 6 month chart. Then it fell to almost 380, and now it's coming back, trying to come back. Look at that. It fell to 320 actually, and then now trying to come back. But you know that's the case with all the gold loan companies, all NBFCs, several microfinance. Deven bhai, would you say that whatever the reason might be, but this pocket is trading at trough valuations now? They've gone through challenging numbers this quarter, or it is too early to say that, and you would stay away.
No, no. In fact, I think Ajay, that is the time to basically take some contraband into this particular space. Though we are definitely not taking call on, I think the sector-specific NBFCs. We would prefer to, I think, take the call on the retail NBFCs, per se, like Bajaj Finance and all, where we feel relatively more confident about their ability to lend to different sectors as well. So we feel more confident about I think likes of Bajaj Finance or the other better housing finance companies within NBFC space and within the corporate banking space also. I think the likes of ICICI Bank, the likes of even for that matter HDFC Bank and even SBI, we find that I think these are some of the larger companies which are likely to show relatively stronger performance going forward. Currently, they are passing through some kind of price rationalization, stroke valuation corrections. And I believe that that's the time for buying into this kind of companies. Because if we buy the India story, where the size of the economy is being talked about from $4 trillion to $10 trillion over next 8, 10 years and above, in such situation, I think the banks with a stronger balance sheet will be the ones who would be producing relatively steadier and better return on a compounded basis for investors' portfolio. So this opportunity is a welcome opportunity. Market is giving correction in some of these stocks, and this is where probably I think you buy them because fundamentals of this company remain absolutely solid, and that's where I think one would like to I think take the contract call in the portfolio and buy these companies.
Okay. Even where is Yes Bank headed? P capital has come in, balance sheet repair has started. I look at very basic indicators in terms of where their NPAs are moving. They've started advertising again, which means management wants to grow the business. CASA is decent. Why is the stock still stuck at 23?
Yeah, it's a good question because I guess I think the all the corrective steps have been taken by the company. Balance sheet is repaired. Most importantly, that part is I think extremely important. The balance sheet is now repaired, and that's where probably I think the company is ready to grow from here. Maybe I think the capitalization process will have to be carried out in this particular bank, wherein in order to make sure that I think you grow decently along with other players in the industry, I think additional amount of capital need to come in. And that's where I believe that I think the new promoter, new investor will have to enter into this particular stock. I guess I think the uncertainty pertaining to that aspect. is probably taking away the possibility of, I think, the stock price value. Even though I must say that I think it has doubled from where it was, I think, 2 years back. So from that perspective, I guess I think it has done, at least I think the justice to the price, I think, from where it was. I believe that I think the next level of trigger should be the trigger with the new investor walking into the bank and unfolding the business from there.
There's a QIP which has been launched by Polymed. Uh, Deven, have you looked at Polymed or any other similar stock, especially in the medical devices space or even electronic manufacturing space? What are your thoughts on the valuations there?
And I think on the sideline, we are looking at, I think, the other stocks. I think companies which are basically into the EMS space. And that is where probably I think you are looking at some of the companies like Cyan DLM, where I find that I think the healthcare division, particularly in this particular case, I think is showing some distinct signs of, I think, looking at the newer segment of products. Likewise, I think there are many other companies which are there, but I believe that I think this is one space which looks interesting. Though at this point of time, I think we don't have enough amount of confidence on the margin front as far as these companies are concerned, as to how much they will be in a position to grow or sustain from current levels. But we believe that I think given the size of the industry which is now opening up, the opportunity which is opening up, I believe that I think the companies could possibly show relatively better performance. But on the other side, as I said earlier before, also in different contexts, when I see the valuations of some of these companies, probably I think you want to definitely wait before jumping into any of the business, even though the opportunity size is big.
Deven, we'll let you go. Thanks very much for your time this morning.
If you like this video, then like, share and subscribe to ET Now.